Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Friday, April 10, 2015. Inside the numbers tonight, we'll talk about the SPY and the E-Mini contract. We'll talk about price levels and the time allotment that was hit right on target today. We'll get into that. We'll talk about the Russell 2000. It was an important close today. We'll get into that. We'll do crude oil, talk about gold, interest rates in the bond market, and we'll close on the U.S. dollar. All right, let's get into it. So let's flip over to the E-Mini contract. We're going to start with the E-Mini contract. Why? Because we want to identify, or we want to just take a look at where the market finished today, which was 2095.50. Okay, and all week long, pretty much I've been giving you 2095 as the target for Friday or worst case Monday. Well, it happened on Friday. Here's the line. 2095. I put that in today as a kind of a target for myself to hit, and we got there. So what's the next step? So where do we go from here? By the way, let's flip over to the SPY. It looks pretty much the same. The price levels are slightly different, but where are we? This is the downside on the SPY chart, right? Where are we going from here, and what to expect next week? It's pretty interesting because next week, right now, we're entering into a turn period again, okay? And because the market's been up, you would think that the turn is going to turn the market down slightly. But it doesn't have to turn down Monday because I still think there could be higher prices ahead. And what I mean by higher prices, and I'm going to use the E-Mini as the proxy here because I know the numbers, okay? You have two upside targets. Let me look at my notes here. Okay, 2103 is the first upside target. Okay, that brings the market right up to here. Okay, 2103. And then beyond that, basically we could be looking at 2115, even slightly higher than that. And what does that mean? It means that we're going to pierce through these highs if we do that. Okay, and from here, basically, that's 20 S&P points from here. So let's translate that over to the SPY and figure out where the price level was. That would be $2 on the SPY, which would bring it up to about 212. Remember this 212.97? That's not out of the question, okay? That would be 30 points in the SPY. It's not out of the question. I'm sorry, 30 points in the S&P or the E-Mini. It's not out of the question. Is it likely? Nah, not so much. Is it enough to put a trade on in terms of probabilities? No. This is one of those things where it's probably got a 30 to 40% chance of happening Monday, Tuesday, Wednesday, but it's there, so I mention it. But it's not the high probability. So what happens? So here's the point. Regardless, let's cut to the chase. Regardless of how high the market goes, Monday, Tuesday, maybe even extending into Wednesday, I do think that we'll start to see a turn occur around that Tuesday, Wednesday time frame, and we should see the market correct a little bit. From what level, we'll have to determine into next week, and that's why I can't even give you a downside target yet because we don't know where the upside pivot is. So what does that mean? It means until we see how high the market goes, there's no way to know how low it'll go in the ensuing corrective sell-off after that, right? So really, there's nothing to do except if you're long, be long. Just be aware that the market probably will turn within the next couple of days, but you can still be long with a stop in or a trailing stop in whatever you have. Okay, but expect higher prices yet. I still think there's higher prices to be had. So that's where we stand in the S&P. Now, I mean, if there's any doubt, just for kicks, I started telling you about 2095 at least 3 or 4 days ago. So this isn't a joke, folks. I get a good read on the market. Sometimes I have numbers and sometimes I don't. I had a number this time, and we hit the number on the day I said we were going to hit it on the spot. Okay? So let's move over to the IWM. I want to mention the IWM. This is really, really important. So the high from this day here was 125.60. Okay, where did we close today? 125.62. Okay, that is no accident. All right, We were lower than that during the day. In fact, let's take a look at the intraday chart, see what happened at the end. We were lower than that, and then the last half an hour, 40 minutes, even the last 10 or 15 minutes, because we were down here in the second to last candle on the 10-minute candle. So at 3:40, 3:45, we were down here. Okay, we were down at 125.45, and what happened? They jammed it up into the close, and the close was 125. Well, on the daily, 125.62. That's the 60-minute. 125.62 on close. 2 cents higher than the number. What does that mean? Why is it significant? Because as long as we closed above the high from here, that clears the way for higher prices. That's another tell for Monday or Tuesday that there could be higher prices coming. If the IWM closed weak, if we closed inside this big down day here and we didn't achieve the top of that, if we didn't close over the top of that, then I would say that the market has really a weakish tendency going into next week, because that's an important level. That's really the last stand before new highs, right? I mean, there's really nothing left to achieve other than this high and this high here. But once we get any momentum going, you're going to bust through that high most likely. So that was an important close, and that's why I wanted to bring up the IWM. All right, that's pretty much what I've got on the stock market, and I think that's good information. Hopefully it's helpful. Let's flip over to the gold market. All right. So gold had a good day today, right? So let's go to the intraday chart. And gold, you woke up in the morning and gold was up. That was nice to see. Spiked right up. Was up at 4:20 in the morning. It just started rallying, and there it goes. Now, what was interesting was, if you remember back from the last several weeks, each and every time gold would pop early in the morning, it would sell off at the end of the day, and that was a sign of weakness, right? We didn't really like that. If you were long gold. But here gold stayed strong all day. So when you go over to the daily chart, what do we have? So we had a low here. We had a nice rally. We hit the number we said we were going to hit, okay? We were going to hit 1217. We hit 1217, and then the market pulled back. But it was a little bit sharper pullback than I would have liked. Nevertheless, I said we could see downside to the 20-period moving average, and as long as we stayed inside this level here, inside of the low, which was 1180.50, okay, then we were still going to be in a bullish scenario, okay? As long as we stayed inside this level, 1180.50, we were in a bullish position. So we're still in a bullish position. I'm going to look for higher prices next week. And hopefully we can get up to that 1141 target that I've got up here. In fact, let's put it in, and we'll keep it there so we can keep an eye on it, right? 1141. So let's just put 1241. Okay. So we're watching 1241. I'm looking at it. I'm looking for it next week. If we can get some momentum going on the upside, I think we can achieve that. GDX. More of the same. Remember, I said we might go into the 20-period moving average. We did go into the 20-period moving average. More conservative traders could have used the low here as a stop out, 1846. A little bit wider stop was 1816. I said you could be long against those numbers. And today we had a nice little up day in GDX, up almost 3%. That's a nice day. If gold goes, so does GDX. So if you're long GDX, let it go. And you should just have a stop a little bit out of the way. But at this point, I would have it at break even at worst, and then move it up or trail it as the market moves up with it. All right, let's go over to the oil market. So we have an interesting scenario today. We have issued a trade alert today in oil, looking for a quick move by, let's say, Tuesday, Wednesday tops, right? We're having a quick up move, hopefully. Remember the line in the sand. Let's go to the intraday. All right, the line in the sand for the crude oil was 51. Okay, $51. Where's 51? Okay, 51. So what happened once we got over 51? All right, remember, let's go to the hourly. Let's just get a snapshot of what happened yesterday. Okay, market danced around 51. Once we recaptured 51, it started building some momentum and it started catching a bid right here, right? And we stayed strong throughout the afternoon and we closed above it. That's a positive. Okay, we closed near the high of the day. That's a positive. Okay, we're looking for a strong day Monday, more positive upside momentum. When I put out the trade alert and I said the target was 53, okay, in the price of the crude futures May contract. 53 is first target, okay? Could see higher prices, but we'll see. So looks good so far. You know, we're in the channel, okay? As long as we're in the channel, the market's going to want to challenge the top end of the channel at least one time, right? So that may happen this coming week. We'll see. But I think as long as we can get a good solid open on Monday, I think we'll see higher prices Monday and Tuesday. So that's what we're looking for. All systems go. Crude oil Monday, Tuesday. What else do we have? Let's switch over to the bond market. We'll bring up TLT. And TLT had, you know, basically it was up and down day. It was up and down really all day. It was down in the morning. It was up in the morning. Let's bring the chart. That's not the one. Let's bring the 10-minute chart. Let's see, we were up, faded down. So it was interesting. You know, the bond market's been somewhat erratic, and you know we're still in no man's land. In fact, this is actually bullish behavior. Okay, so I wouldn't be surprised as long as we stay above this 50-period moving average, which is the blue line. I wouldn't be surprised to see a pop up in TLT and the bond market early next week or at any point next week. I just think this is a bullish formation. If we break down, you know, then you can see 127.5, 128 on the downside and maybe even lower. But it's in no man's land. It's really not giving us a definitive direction right now. Had a wide range yesterday. You're inside that range today, but you're not going anywhere. Today you just bounced in between the moving averages. Today, yesterday you had a pretty wide range day, and it was negative. So it's not really telling us anything. We got to wait for the market to tell us what to do. And until that time, we're not going to take a trade. We're just going to wait for the market to signal. If you look at the interest rates, which is the flip side of the bond market, you know, same thing, just on the flip side. Caught a little bit of a bid this week, but in order to have any more upside momentum in interest rates, you really need to recapture the moving averages, and then you can start to work up back up to 2% and then maybe 2.20. But this is the 10-year yield. But, you know, there's just not much going on right now. There's nothing definitive the market's telling me it wants to go one way or the other. But it has been erratic, and the stock market's been erratic, and I've been writing about that a little bit recently. When the market is erratic, it's normally telling you it's getting ready for a larger move in a direction, right? So market was stuck in the mud. It was down this week. It was up. It was down. It was up. And then all of a sudden, you know, we started catching a bid, and we started catching another bid, and then we got to the 2095. And if there's higher prices, then that would explain some of the erratic behavior. Remember, I always like to tell you, the market generally does the other thing, something it's not supposed to do, right before it does the thing it's supposed to do. So like if you see a bullish pattern emerge, and I say, hey, this is a bullish pattern, it's bullish behavior, it's good momentum, and we get in a trade, invariably every time the market just goes the other way. It kind of knows that you're there, and it just does it to piss you off. And I'm like underwater in almost every trade I take for a little period of time, at least anyway. And then, you know, and then it normally works out the way it's supposed to work out, at least most of the time. But, you know, normally the stock market does that a lot more than the bond market, but I see the same thing developing in the bond market right now. So I feel like a larger move is imminent in the bond market. And remember, the markets are there to trick us. It's there to shake you out. Earlier in the week, when we went down, we flushed out, we shook out the weak hands, and then they spiked it right back up to 2095. It's pretty interesting how that works. It's like a movie that you just sit back and you watch, and you kind of know the ending, but you don't know how the middle is going to shape up. You don't know, you know, where they're going to take it and how they're going to do it, but you know how it winds up. It's kind of funny. It's very predictable, but the middle is not. The end is predictable. Let's go to the dollar. We're going to wrap on the dollar. Dollar was strong. I'm still looking for the zone. What I can tell you is I would be very surprised if we did not. Let me repeat that. I would be very surprised if we did not see a dollar pullback next week, at least into the 20-period moving average, maybe below. Okay, numbers I can give you is, 99 would be a first stopping point right up here. That's an easy number. And then the next stopping point is right around that 200-period moving average at about 98.25, 98.35. And that's a decent pullback from where we are, but we may spike over 100 first, like for Monday, for example. So let's say we spike up over 100 Monday, and we get 100, 105, 100.5, 100.10. If we fail at those numbers and we begin to close hourly back below 100, you can short the dollar because it's going to go lower. And if we close the day below 100 after spiking over it, if we spike over 100 and close the day below 100 on Monday, that's a stone cold short. Okay, just remember that. All right, over 100, close below it, stone cold short. Other than that, folks, I think I'm going to give it a wrap for the week. I hope everybody has a great weekend. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.